Hey guys, welcome to another video by Fully Informed Trade, or FI Trade for short. My name is Alex and I'm just going to go ahead and talk about the stock, commodity, bond, and Forex market. So without further ado, let's go ahead and get into the data and let's start talking about the dollar index. Dollar index seems to have found support again at the $79 level. I would recommend you guys buying in right around here and placing a tight stop right below $79 and right below the chewing tails that you see right here or right here. That could give you a great opportunity to go ahead and buy into this near bottom and make a huge amount of money towards the $81 level and maybe beyond, depending on however much this earnings fueled rally pulls back by. Alright, and I also mentioned that this neckline, which is pretty much this right here, the double topping neckline, you could find some great support there, and we keep finding great support there. If not, the next support level would be around $78, and below that you have the next support level, which is around $75.50, somewhere around there. And that's pretty much what I'm looking at in terms of support. Let's go ahead and look at the next chart, which is the E-mini S&P 500 futures. After the close, they continue on their positive streak. If you go ahead and look, let's go ahead and watch how positive these markets stay. And they continue their positive movements at around, they pulled back a bit at around, 3:30 p.m. and then they start rallying. Investors are probably anticipating some positive movements, but notice carefully, you got this double top pattern. When you have a double top pattern, that could probably create that could eventually lead into a basic pullback just to continue a little higher. So pretty much that's what I see. We should see the markets going a little higher for the next week or so, maybe an extra 5 or 6 days. But after that, after earnings are already through and over, things can get a little bit more negative. So be cautious buyers and only short-term buyers. If you guys are longer-term investors, wait until the hype is out. Wait until people start selling their stocks and then be the bargain hunter you probably would prefer to be. Because right now stocks are a bit expensive on the shorter term. Let's go ahead and look at the next chart, which is the Dow Jones Industrial Average. 11,731 was where it closed at, and I believe it opened at around 11,754. Let's go over the basic statistics. Dow Jones negative 0.20%, S&P 500 negative 0.17%, Nasdaq negative 0.07%, Russell 2000 negative 0.09%, S&P 400 mid cap negative 0.07%, S&P 600 small cap positive 0.02%. Let's go ahead and look at the sectors. What performed good, what performed bad. First of all, the worst performing sectors were materials negative 0.86%. The next worst performing sector was healthcare at negative 0.53%, and following that, the next worst performing sector was the financials at negative 0.35%. Overall, markets performed negatively for today's trading session, and not many did that well. Because of that, let's go ahead and look at a couple months chart, and you're seeing that the markets are, you still have this crossover on the oscillator, and this could just be a short-term pullback. And that's what I'm anticipating. You're going to see a bigger pullback maybe later on. It depends, and I'm going to call it as I see it as things continue to progress. Let's go ahead and look at the next chart, which is pretty much the XAU USDO. And pretty much I said that if you're going to buy into this, buy only after it breaks above the 20-day moving average. It couldn't break the 20-day moving average, and if you want to go ahead and look, it couldn't break the 20-day moving average, and it's also led into an A pattern. And I got a mini head and shoulder pattern. You got this right here, and I got this right here, and that's pretty much where it pulled back. You got this mini head and shoulder pattern on top of an A pattern, and a continued downtrend. And on top of that, you couldn't break above the 20-day moving average. Overall, gold isn't too hot, and over the longer term, if you guys are to buy anywhere near this multi-year trend line, I'm going to go ahead and show you real quick, right here, multi-year trend line. And pretty much, if you guys ever buy above this multi-year trend line, chances are you're not going to make it out alive. And not right there. Right here is a multi-year trend line. And pretty much, we got this market trying to find support above it. But realistically, it's not safe. Don't buy it. Don't buy the hype. Stay away. and wait until we get into a reasonable area. A reasonable area to me personally would be somewhere around 1,250. That would be a reasonable entry point. So let's go ahead and look back a bit. 1,250 might be reasonable. If we pull this back a little bit further, we could consider a different level, which would still be the same area, 1,250. So that's where I would look to make some buy entries as a value investor. Let's go ahead and look back at the XAG USDO. Same story here. I anticipated a head and shoulder pattern well in advance. If you guys want to go ahead and check out those videos, please be sure to go ahead and look through my archives. But pretty much you got this head and shoulder pattern on top of an A pattern and a market that couldn't break above the 20-day moving average. So pretty much it was a pullback that happened, and I also mentioned that it was most likely going to be a short-term relief rally, and the bigger pullback will come much later on, and this could continue downwards. And and honestly, if you guys want to buy into this, $25 seems to be a very attractive area to look for a buy entry. And the next support level will be $23, and the probability of getting down here could probably be something like an intraday, a super long tail, something similar to the flash crash. Kind of reminds me of that, but pretty much you can have like this ridiculously long tail or a really long tail that comes all the way down to $25, then it goes all the way back up. So even if it were to reach $23 like that, it would only be for like a time span of maybe 10 to 20 minutes, and that's it. Let's go ahead and look at the next chart, which is the bond market. And you got this channel right here. You got the top channel and you got the bottom channel. Bottom channel 119, top channel around 122. And chances are we're going to try and touch this top channel, pull back to the 20-day moving average, touch this top channel, break back down to the 20-day moving average until finally the stock market sells off and this bond market rallies above the $122 level. And also later on, later on in 2011, when markets start making new highs, the bond market will start making new lows for the year of 2011. Keep that in mind. Bonds are hot for the shorter term, or more like the midterm one, like for the midterm, but over the longer term, we're still in a multi-year cyclical negative trend. And also, if you guys want to get a basic idea, basically, if we go ahead and put in the trade triangles, you got this somewhat of a mixed trend, and over the longer term, it feels negative. I still feel that there's going to be some positive movements in the market, and that's going to be after earnings are over. Let's go ahead and move on to the next chart, which is the crude oil market. And pretty much you got this double top pattern, and you got and pretty much you're gonna find in the market, if it continues the way it is and it starts pulling back, and once earnings is over, and this is gonna take like maybe 5 days at most. Earnings and the crude oil continues this pullback or whatever, what we could probably see over the really long term, or not really long term, but more like a midterm, 2-month time frame, maybe a 1-month time frame, you could probably see a pullback to $88 and go back up to around 92, and that's what you're seeing right here. Pull back to 88 up to 92, and then it could pull back all the way down to 84, or maybe even lower, who knows, and then go back up to around the same 92 level, pull back again, and then continue higher and breaking this resistance level at around $92 and continuing higher throughout 2011 up beyond $100, or $100 would probably be the price target for 2011. I don't really have an exact price target on it yet, but I'm more than certain we're going to break beyond $100 on the crude oil market later on, probably past probably the second half, third or fourth quarter of 2011. And because of that, I'm just looking for an inverse head and shoulder pattern for right now. And I don't know what you guys are thinking out there, but please be sure to leave some comments. Tell your friends about me. If you're on Facebook, tell your friends about me. Have them send me a friend request to be sure to help them talk about investing, or they could just watch these videos I make or whatever. And if you're on YouTube, please subscribe. Tell your YouTube friends to subscribe. I'd really appreciate it. And also, if you want to use the same charting software that I use, please be sure to go ahead and check out the link above or below this video. It's generally going to be below this video if you're on YouTube and Facebook. Without further ado, I'm going to go ahead and call it quits for today, and I hope you all liked this video. Take care, folks, and I'll go ahead and see you guys next time.